Hi, I'm Robbie Young. I'm an intern at FinTech TV, and you're watching Taking Stock.
Time to rock and roll live from the trading floor of the New York Stock Exchange. 2 minutes to go here until the closing bell. Markets are moving higher, and the New York Knicks are NBA champions. To be clear, those two things have nothing to do with one another. I just felt like saying it. Welcome to the broadcast today, one and all. I'm your host, JD Durkin. You are watching Taking Stock live from the trading floor of the big board. Markets off and running. That has been the tail of the tape since this morning's opening auction, and they haven't really showed signs of slowing down during intraday trading. We are expected to see the S&P 500 finish higher 1.5%. The Dow up, let's call it 0.9. The New York Stock Exchange Composite Index up fractionally, and the small caps in positive territory, 0.6%. A pretty rare gap up into this morning's open for the S&P 500 after the White House announcing at least the framework of a deal with Iran. The president taking to social media yesterday to say, quote, "Ships of the world, start your engines." Been a while since we looked up here at the big board at the New York Stock Exchange and see some of our crude benchmarks like West Texas and Brent trading back in the low 80s. Oil down, equities higher. That largely defines your risk on tape today. In the S&P 500, technology stocks, industrials, and consumer discretionary, those are your outperformers. A bit of some lagging sectors here as well. Healthcare, real estate, as well as energy. The team from CGI, this is ticker symbol GIB, set to do the honors, will also join us today on this Championship Monday edition of the show. Time now for the closing bell. All right, and there you have it. We'll take a look at your final tail of the tape on this Monday, June 15th. The S&P 500 up 166. The Dow up 0.9. The New York Stock Exchange Composite Index in positive territory, 0.3. And the small caps, the Russell 2000 up 0.7% as well. In the Dow, which is at an all-time high, Boeing, Honeywell, and Amex, your Dow outperformers, your laggards out of those 30 household name stocks. Chevron, Merck, and Coca-Cola, 12 of the 13 most weighted Dow stocks in positive territory, helps explain why that benchmark index finished at an all-time high. Goldman Sachs specifically continuing its push well north now of $1,000 a share. The Mag 7 tech stocks ripping across the board. Shares of Meta up about 4% into the close. SpaceX up 19% on today. Of course, its second day since its IPO. Also catching a bid, the major airlines, the big banks, the fintech stocks, the semiconductors, memory, and quantum alike. It's not very difficult to find a sector in the S&P 500 ripping higher. Let's bring in our good friend Ted Thatcher. He is the founder and president of Bright Lake Wealth Management for his take. My man, nice to see you here as always.
Great to see you.
Grateful for your time. Are you surprised that this is the reaction we had after that Iran deal announced? I thought for a long time this was already kind of priced in or assumed.
Sure.
What happened today?
You know, I'm calling it the peace deal put at this point in the markets. We've seen a whole bunch of green today, and ultimately, you know, when you see, I think the consequence that we've gotten such a good day is because oil prices are down. You're absolutely right. We've actually thought we were going to get peace. We didn't get it, and the market has barely moved. But when we see the actual, I think, legitimization, not just from the president and the administration, you know, being hopeful, but when we see that recognized on the Iranian side as well through their state media, it's met, of course, a green day today.
There's going to be a lot of news out of Washington, D.C. for investors here on Wall Street and around the world to digest. It's not just news out of the White House. How about Wednesday's Fed Day? We are expecting the decision from the FOMC to be a hold, but it's going to be all eyes on Kevin Warsh's first time there behind the podium. What are you looking for Wednesday?
Yeah, he's in the batter's box for the first time here. I don't anticipate any rate changes, but what I'm really interested, JD, in is what he says specifically around AI. You know, we've heard this narrative about AI being deflationary. I don't necessarily think he should be jumping in with both feet in that narrative just yet, although I do think that this peace deal makes his way a little bit easier this week. Obviously, consumers have been under pressure. We see it in all the headline inflation numbers, but you know, now we have a little bit of a light at the end of the tunnel, actually.
It's the first time you and I are talking since SpaceX's IPO on Friday. We saw another pop in shares today. Yeah. Investors are getting ready for the Anthropics, the OpenAIs. We got a big summer of these big blockbuster IPOs. How are you thinking about the performance of that stock on Friday into this week and what this means for the road ahead?
You know, when we look at SpaceX, there's been so much talk from commentators about why this is overvalued. And obviously investors should be careful here. But I think that a lot of those folks have not actually given credit where credit is due actually. We've said, okay, we're paying 300 times EBITDA for this company at a $2 trillion valuation. Should we do that? I think that that actually misses the point though. That point being the denominator in that figure is changing just so rapidly. Of course, SpaceX has an amazing launch business. Let's set that aside. Of course, it's a huge moat. Let's set aside the cursor business that they have and the upside there. Let's look at the fundamentals here. Of course, on their connectivity business, Starlink, they have just less than 1% of the world's houses on Starlink. And if we look at the way the big banks priced this IPO, they did not price it for today's revenue. They priced it based on the growth. They're expecting $160 billion in revenue by 2028, actually expecting 110 of that to be EBITDA. Even if they don't hit those benchmarks, I think that there's still a case to be made that SpaceX, even at the high valuations we're seeing, is fundamentally sound.
What are some of the biggest questions that your clients at Bright Lake are asking you about these highly anticipated IPOs? They see the headlines. Do you see a lot of interest that people want involved?
You know, retirees are asking that question. Hey, is this a blue chip type company? Is it safe? Look, obviously this is a high growth type of company, but the sections of that company that I'm looking at in most, again, are the connectivity and then really the AI compute business. If we just look at the last 30 days, JD, SpaceX has actually become the fourth in the four position of the hyperscalers, knocking off Oracle. We have Anthropic, we have Google paying them $26 billion of revenue now, and really importantly, we look at Colossus 1, we look at Colossus 2. They stood that up in 122 days and 92 days. Speed is cost. They're doing it at a much lower cost than their competitors. The neoscalers are only getting 15 to 20 billion per gigawatt per year. Those, the Anthropic and Google deal are actually at a 50 to 70 billion dollar per gigawatt per year rate. So not only are they going faster, costs are lower, they're getting 4 to 5x the margin on those build-outs.
The man who coined the phrase, the peace deal put, my man, come back on the show anytime. It's always nice to see you. Ted Thacher, founder, president, Bright Lake Wealth Management. Robbie, you'll grab your mic. We'll talk to you again soon. All right, Howard, we'll go this way. Here's some of the top analyst calls that moved the tape this morning here on Wall Street. First up, Truist. This is the worst time to walk through the camera. Excuse me, everyone. Thank you. Truist upgrading Datadog to a buy from a hold rating, saying their math shows a higher path than other consensus calls here on Wall Street. Shares up 73% so far year to date. Next up, Citi downgrading Old Dominion to a sell rating from neutral rating. Quote, with many trucking stocks near their all-time highs, we believe elevated optimism appears reflected in valuation. Shares down today, up about 50% on the year. Finally, TD Cowen reiterating Micron as a buy, lifting the price target to $1,500 ahead of earnings. Micron trading at an all-time high. They will report quarterly results next Wednesday, June 24th. We got to talk about a couple stocks that called the New York Stock Exchange their home in our daily segment, NYSE Notables, just one day after the huge Lewis Hamilton F1 win yesterday in Barcelona. Morgan Stanley also upgrading Ferrari stock to overweight, lifting the price target to $438 a share from $388. Shares are about flat so far year to date, but up just a whisker under 4% here on this Monday here at the New York Stock Exchange. Howard, let's take a look here at Hawkeye 360, up 5.5% today. Jefferies upgrading the stock to a buy from a hold, saying buy the dip in this aerospace company, with shares down 25% since the start of June. Brand new price target on the stock, 34%. It opened today at 25 and is up about $1.31 in today's trading. In partnership with the great team over at StockTwits, FinTech TV anchor Johnny Fernandez sat down with Matt Markevich from Trader ETFs to hear all about their leveraged SpaceX ETF products. Take a look.
And SpaceX is one of the most talked about companies in the world. And for traders who want to express a view on that story, well, Trader ETF is building some tools to do that. Now, joining me to talk about this is Matt Markevich, head of product and capital markets for Trader ETFs. Matt, thanks so much for joining us today.
Thanks for having me, Johnny.
So, Matt, let's get to it. Trader just launched two new single stock SpaceX ETFs, SPCM and SPCG. Now, for viewers who are not familiar, quickly walk us through what these products are and how they work.
Sure. So SPCM, or that we affectionately call Spaceman, is the ticker. That is an ETF that seeks 200% long of SpaceX daily move. And then SPCG, that we're calling Space Gal, nickname, that gives you inverse or short 200% exposure to SpaceX's daily price move.
I love the names, but let's also talk about leverage ETFs. They are not for every type of investor, as we know, but who should be looking at these SpaceX ETFs specifically, and how should they be thinking about using them responsibly?
Yeah, so they're really intended for a more sophisticated investor. And what do I mean by that? They're somebody who's been trading for a while. They can maintain their portfolio and watch it closely. These are not set it and forget it products. And as they are quite volatile and they do have different risks than what I'll call a plain vanilla ETF. So they are for someone who is going to be able to keep a close eye on SpaceX's price and have pretty clear defined entry and exit points as well.
So let's talk about IPOs. In the past, we've seen certain IPOs surge to things like 68% on its first day of trading. That kind of first day volatility is exactly what tools like yours come in to play. So how do we see high profile listings like that one shaping the way traders use your products?
Yeah, so that Cerberus ETF was, first of all, it was the biggest tech IPO since Uber in 2019. So it was very closely watched. As you mentioned, they had a 68% end of day gain, which is just a pretty monster day for an IPO. But it's that volatility, Johnny, that people really like to play when they're using single stock leverage ETFs. So they're looking for that, 1 day gain, and whether they have a view that maybe that gain is just too much. They want to short it the next day. We did see Cerberus trade down 10% on the day following the IPO. So it's that type of volatility that really attracts traders to using single stock leverage ETFs.
So we also know that a lot of active traders already have margin accounts. So make a case on why they should consider trader leverage ETFs instead.
So margin accounts may require you to post a margin call. Maybe a brokerage wants money to cover some performance that really needs to be made up. And with leverage ETFs, there are no margin calls. And from that perspective, it's a little bit easier to use, I would say. You don't have to worry about the big swings in the product. You're never going to get called away by your brokerage platform.
So let's talk about timing, because we know that timing is everything, especially when it comes to trading. So are there any specific moments on the calendar, such as earnings seasons or any major company announcements, when your single stock ETFs could become a powerful tool?
Yeah, we see on average the volumes in our single stock ETFs go up about 3 to 5 times around earnings reports. And again, that's because there's usually some big dislocation with the stock, whether they beat earnings or miss. And traders do like that volatility. So that's a big one. Also big news announcements, follow on momentum, really company announces a big contract win, for instance, and you see a couple of days of upside momentum. We see a lot of people playing that momentum swing trade with our ETFs.
So SpaceX has recently made massive headlines and it's a big talk, but it's not the only massive IPO the market is watching for. So what can you tell us about traders' plans to be ready with ITF products around those highly anticipated listings?
So while they might not be the largest IPOs of all time, I'm specifically talking about the OpenAI and Anthropic filings that have recently happened. We have products that are being reviewed in registration for those two, as well as a bunch of other pre-IPO stocks. Of course, we don't know the timing. They could be this year, they could be next, but we kind of like to stay on the cutting edge for new trends and themes in single stock land. And those IPOs, of course, will be there, and we hopefully will be ready to have products on them.
Awesome. Well, Matt, it sounds like it's an exciting time at Trader ETF, so definitely excited to have you. Thank you for sharing all this new information and the wealth of knowledge for the traders watching.
Thanks for having me, Johnny.
And of course, to learn more about Trader ETF, you can log on to fintech.tv. I'm Johnny Fernandez, and thank you for watching FinTech TV.
The trading floor of the New York Stock Exchange, Vijay Srinivasan joins us now. He is the president of U.S. Commercial and State Government Operations at CGI. Just rang the closing bell here at the big board. How do you do today? Thanks for joining us.
Hey, thank you, JD. Hello, everyone. Yeah, it was a fun event. It's a big milestone for us because today is the day when we were founded 50 years back, June 15th of 1976, exact day. And I just wanted to introduce CGI to your viewers. 94,000 people, global IT and business consulting services company. 400 offices, 40 countries, and we call our employees owners because everybody get to take part in the ownership of the company. And we are here to celebrate all those folks who got us here, our clients, our employees, our own partners, and of course our communities where we live and work.
Yeah, you don't just specialize in IT, you're one of the world's largest IT and consulting firms, now only 50 years young. Congratulations,
Yeah,
of course,
thank you.
what a day it is. What has allowed the company to last through not just 5 decades, but multiple technological revolutions? The underlying tech continues to change, yet here you still are.
Yeah, no, so last 50 years, we have been focused on doing one thing and one thing only, which is making sure that we bring the best of what we have to offer as an organization to our clients. We call it, our model is called proximity. We are close to our clients. And by being close to our clients, I just don't mean physically, but also clearly developing an understanding of what our client's business is. And then doing everything that we can to make sure that they are realizing the business value for and the outcomes that they deserve for their end clients, right? So it's that, and then it's also about the ownership mentality that our partners have, because everybody gets to take part in the ownership of the company. So if you put all of those things together, this company was founded with a simple idea that when we are close to our clients, we understand their business, and when we have the right skills both from a business and technology perspective, and when we put clients as the central part of what we are here for, and of course returning value to our shareholders, we will do right by everybody, all the three stakeholders. We call it shareholders, clients, and our partners, our employees.
I got about a minute left. I love the idea of government. Governments, state governments, local governments, they're under a lot of pressure to modernize their own legacy systems. Where do you see as being some of the biggest opportunities in that conversation?
I think if this conversation wouldn't end if I don't say the word AI. Of course, that's where we see a lot of opportunities for the firms like ours. One of the things we do is it's not just about being able to do what the client is asking for. It's also about understanding what they really need and consulting with them, being a trusted advisor. So when you are a trusted advisor, you know your client's business. One of the things you can do is be relevant to them. So that's what we do, and that's where we see the most opportunity. That's what we are inspired by.
Vijay Srinivasan is the president of U.S. Commercial State Government Operations at CGI. Just rang the closing bell. Come back and see us anytime. What a pleasure.
Thank you, JD. Thanks for your...
Congratulations, of course. Don't go anywhere. A lot more Taking Stock coming up live from the big board right after this. Awesome. Welcome back to the show. Time now for the latest headlines in the worlds of fintech, crypto, and artificial intelligence you need for your Monday afternoon. First up, Bitcoin up 1% to right around 66,500. ETH up 5%. Solana, the big winner, up 12%. Next up, Kraken launching crypto perpetual futures trading for U.S. customers, giving traders access to derivatives that track Bitcoin, as well as other crucial digital assets without an expiration date. And finally, USD1, the stablecoin issued by Trump-backed crypto venture World Liberty Financial, was used to pay out $250,000 in fighter bonuses at the UFC event held on the South Lawn of the White House this past weekend. Yields fell today here on Wall Street, but we've seen lots of big recent moves to the upside, powered, of course, by bond vigilantes selling treasuries in recent weeks. Last week on the J.D. Durkin Show here at the Big Board, I talked with Sean Russo of Ritholtz about those treasury yields, about small cap breakouts, and a lot more. Take a look. But I feel like it was a combination of the bond vigilantes here on Wall Street. They were maybe sending a little bit of an early warning signal to Warsh, a bit concerned about the spending priorities of the federal government. So they can raise their grievances in a pretty loud way when they want to. What more have you been tracking in the general bond conversation, Sean?
I think there's a lot going on with interest rates. It's impossible to know where it goes, but I want to lay two things out. One, earnings look great, right? So higher rates has not been a headwind to stocks really at all the last year, 2 years. So that's one. And I know that AI is playing a big part of that. This is one thing I want to lay out, is that we're in a bull market. We have like a momentum tailwind. But two, as it relates to interest rates, the labor market's starting to come on board here, right? We're starting to see some strength in the consumer. Spending is looking decent. Ross Stores was just added to one of our lists that we track for a lot of the best stocks in the market. So we're really seeing some strength in the consumer, and that's another reason why rates probably aren't going to be coming down in the near term.
Have you ever shopped at a Ross? They're popular out in California, like out in LA,
I have.
SoCal. You ever been to one?
Yeah, see, they're a little messy. Yeah, I don't know how I feel about it. Like, I like a little more of an organized store, but yeah, I'm down for a discount. I'm a value guy.
A lot of these value places, like the treasure hunt places, they can be a little messy. I think that's sort of part of the appeal to some shoppers. But obviously, in an environment of a distressed consumer, a lot of people like the treasure hunt, especially for an off-price retailer. I'm looking at the Ross chart right now, up to 242. I assume this is an all-time high. Yeah, an all-time high by a bit, so it's doing really well. All right, producers, let's head to the next chart here while we still have Mr. Russo. I think we're at small cap breakouts. Finally ready to play a little bit of catch up to large cap. Sean, what do you see here?
I mean, it's incredible. I mean, there's just so many reasons to sell, right? We've got news from Iran every day. We've got interest rates. We've got who knows what's going on with the IPO and liquidity. And there's just so many things going on. And you take a look at small caps, and we almost have as many all-time highs in small caps as we do large caps. Again, rates are generally a headwind to smaller companies, right? They have to borrow at a higher rate, right? It tends to hurt their earnings, which I have an earnings chart for small caps specifically. But to me, this is a great window into small businesses and the consumer and the strength of, middle America. I think that we're starting to see some bullishness there. Okay, here's earnings. Earnings are recovering. So it totally makes sense. Like, look at how much of a drawdown earnings per share were for the S&P 600, which is small caps. It's a quality version of the Russell 2000. Look at the drawdown, right? We've soared all the way back to within 1 or 2% of all-time highs in terms of earnings, right? This is really, really great for people who are value investors, people who are diversified investors, and it's great for the country, really.
How important is the earnings recovery storyline to the general small cap bull thesis?
It's everything. Earnings drive the earnings drive the stock market in the long run, right? It's in the short run, you can argue, and it's a little bit messier, of course, but in the long run, if earnings are good, you can expect stock price to match that.
I'm going to pop in with a very important question. How do you make your charts, by the way? How do you pull these together? These things look beautiful, dude.
I listened to Chart Kid Matt.
I look over what Matt does, and I'm like, how does he do it? These look great, but kind of more broadly, how are you guys kind of at Ritholtz and your role, Sean? How are you going about crafting, either trying to shine a spotlight onto charts or parts of the market that are otherwise pretty underdiscovered? I mean, you got to be going under the hood yourself a fair bit. Walk me through your process on this.
Totally. Yeah, at Ritholtz, we're diversified, we're disciplined investors. For the most part, we use a combination of factor exposures and passive indexes, and then we'll have a little satellite for tactical exposures, or momentum and growth focused exposures. But we find, and especially with Matt working with us, we find that people just really love visuals. Like it makes the stories a lot easier, especially when you can get into complexities like rates and momentum and value and forward PE ratios and all that stuff. So having like a simple visual to really hit your point home has been really special.
Welcome back to the show, and now Scarlett Sieber from Money 2020 is back to explain the ways that fintech companies actually make their money. Take a look.
I'm Scarlett Sieber, Chief Strategy Officer here at Money 2020, and this is how fintech companies actually make money, where spend isn't a feature, it's a discipline. Today we're going to be talking about Airbase. Airbase combines spend management, accounts payable, and approvals into one single system. So how does Airbase actually make money? First, subscription fees, all through SaaS, of course. Second, workflow expansion, more modules, more revenue. Third, organizational lock-in. Once approval logic, policies, and controls live inside Airbase, switching isn't a procurement decision, it's an organizational one. Airbase doesn't monetize transactions, it monetizes governance. And that is how Airbase actually makes money, by embedding control before chaos appears. It sounds small, but it's not. It's a big deal. So if there's a company you want us to feature, go ahead and drop it in the comments, and it might just make the cut. In the meantime, back over to you.
I don't know exactly what we're doing. Welcome back to the show. Before we wrap up today's broadcast live from the trading floor of the New York Stock Exchange, we're going to take a quick look at a couple viewer-submitted comments. Trust me, we've had millions to go through, but here are two of our favorites. Picnic asks, how will the SpaceX IPO and the supposed upcoming other IPOs impact the average consumer? For the average consumers at home, even if you don't own the underlying SpaceX stock itself, you will still likely have exposure to index funds in your retirement account. Somewhat controversially, I would argue, the NASDAQ 100 adding SpaceX. To be fair, your exposure less than 1%. Not in the S&P 500 right now, still needs to show a few quarters of profitability. Captain Bosch asked about value and market cap contingent on a false sense of macro market, he says right now. It is contingent on the stock price itself, which is much more reliant on institutional dollars than retail flow. I would argue. Watch this space. Thank you for your comments, and thanks for watching today's edition of Taking Stock, live from the trading floor. The S&P 500 up 1.6%. Thanks for watching. Have a great Monday night. We'll see you again tomorrow.